A four-step process to massively improve your day trading. Now, when we talk about day trading is something that people are really drawn to. They're fascinated by. Day trading represents a path for people to get rich quick. This is why there's so much interest in it. And in some respects, there's more interest in day trading now than there ever has been. This new generation that's in their 20s and their 30s, they work from home and they look at day trading as something that they can do to either supplement or replace the income from their job. And they see the stories on Reddit and places like this where people are making 10, 20, 50, $100,000 in a day. And they're like, I want to do this. But we have to understand, yes, the biggest returns can lie in day trading. One thing that's so interesting is that in trading, wherever the biggest returns are, right next to the biggest returns is bankruptcy. Literally, we can plot a graph of where you would make the most money in a strategy, and right next to where you make the most money is ruin or bankruptcy. Day trading can be the best way to make money, but it's also the fastest way to go bankrupt. It's also the fastest way to completely fuck up your mind. It can be very dangerous. So let's talk about this for a moment. Why is that? So I've never been a big gambler. And one of the reasons I've never been a big gambler is I know that when I go to the casino, or if I were to play the lottery or bet on sports or whatever the case may be, particularly let's say the casino, the odds of me winning are usually against me. Most games, the odds are in favor of the house. And in some games like blackjack, yes, you can be patient. You can understand how to count cards. And in the right situation, you can generate a favorable edge. But that edge is small. It takes a long time. And I'm like, why do I want to do this when I can trade? When I trade, the odds are on my side, not the house. And when I trade, I can make so much more. I can generate such bigger edges than I can if I gamble. So I just never been interested in it. Now, my dad was a big gambler, and we used to do these father-son trips. So he'd go off and play craps for hours. And so for a while, I was playing blackjack just to kind of pass time. But what I found for me, what was the most interesting was that I would watch the other players. I didn't really care so much about myself. It just became a psychological exercise that I would watch the plays that other players would make in blackjack. And I would consistently see them make stupid bets where they would bet against the odds. Now, their justification was they had a hunch, they had intuition, that if they went against the odds, this time it would work out. Now, sometimes it did, but of course, the odds were against them. So most of the time they failed. But the big thing I saw gamblers completely fall apart while they were playing blackjack. So in gambling, they call it going on tilt. Going on tilt is basically when you lose self-control and you lose all your money. Now, why is this? Well, in gambling, like when I play blackjack or I do slots or craps or whatever the case may be, roulette, when the time between when I place the bet and when I get feedback about whether I won or lost is really, really short, almost immediate, right? If you think about blackjack, we play a hand, depends how many other players are playing, but we're going to play that hand in a minute to 3 minutes. And I'm going to have feedback about whether I won or lost. Roulette, place my bet, they spin the wheel. Wheel spins for 20 seconds or so. Boom, I get feedback whether I won or lost. Craps, everybody places their bets. I throw the dice. And as soon as the dice stops, I have feedback about whether I won or lost. When the feedback is really short, like it is in gambling, this raises the excitement in the brain. And when we raise the excitement, it becomes potentially more dangerous. So think about day trading. I can go make a swing trade, for example, and I could be in a swing trade for 2 to 3, 5, 7 days. If it doesn't work, I'll get stopped out. The feedback will be shorter, but it'll still likely be at least hours, if not a day or two, right? So I make my trade and then I'm waiting. Well, I'm lengthening the distance between the bet, placing the trade, and the reward or the feedback. So the more I increase the distance, the less emotionally invested I am in the trade. Now, when we go to day trading, what we're doing is we're shrinking it. Right now in day trading, I have trades that I'm making that I'll be in for 5 to 10 minutes, an hour. And again, usually in these trades, when you're wrong, you get feedback faster. And when you're right, it takes longer. This is also interesting because how it plays on the mind. So when I get feedback quickly that I'm wrong, it's the same way as losing in the game in a casino. So I lose, and so what can I do? I can come right back and make another bet. I can come right back and make another bet. And then is if I come back and make another bet and I lose again, then my anxiety starts to rise. And a lot of times what happens is rather than walk away and say, you know what, I've lost 3 bets in a row, I probably should take a break. No, in day trading or at the casino, you'll see in the gambler, there starts to be like, oh my gosh, I lost this money. I need to get it back. So I need to place another bet. If I place another bet, I can get my money back. If I place another bet, I can get my money back. Well, I lose, and I lose. So if I place another bet, I'll get my money back. So I place another bet and I lose. And not only that, the mind starts to think about to get my money back, I need to bet bigger. I bet 25 bucks and I lose. So I'm down 25 bucks. Right. So then maybe I do that for the first 2 bets. So I'm down 50 bucks. But now I'm like, oh my gosh, I'm down 50 bucks. I need to get this money back. I know what I'll do. I'll bet 50 bucks. And if I win, I'll be back to even. So I bet 50 bucks. I lose. Now I'm down 100. Now I'm thinking, well, if I want to get my $100 back, I'm going to need to bet 100. This is called a martingale strategy. So now I bet bigger. Now I lose 100. Now I'm down 200. I've lost 4 times in a row and I'm down 200 bucks. And what starts to happen is the anxiety or the anger really starts to rise. And now we're no longer thinking objectively, we're thinking completely emotionally, and we're fully focused on our losses. Same thing happens in day trading. I bet 250 bucks, I lose. I bet another 250 bucks, I lose. Now I'm down 500 bucks. And I start going, what do I need to do to get my $500 back? I'll make a trade of bet 500 bucks. And eventually you might even get to a trade where maybe you lose, you bet 500 bucks, now you're down 1,000. Now you say, oh, I need to get $1,000 back. So now you bet 1,000 bucks. One thing in gambling that is a benefit to the bettor is that the odds are fixed. So when the event comes, you know that if you bet $1,000, you lost $1,000. It's not the case in trading. So maybe now I'm in the case where I'm like, I need to make $1,000 to get my money back. So I'll bet $1,000, knowing that I can get 1,000 back. Well, now that trade doesn't work. And as it starts to near losing $1,000, you're like, well, I'm going to be down $2,000 and I can't lose that kind of, I'll wait. I bet on this trade, I can wait and I can get the money back. So they don't get out when they're supposed to. And now the losses go from 1,000 to 2,000 or 5,000. And pretty soon somebody can literally blow 50% or their entire account in a single day, even in a few hours. When people lose $100,000, $200,000 in a morning because their mind is going through this loop. This is why day trading is so dangerous. What I want to share with you, some of you, you never do that. You're very disciplined, but you still struggle. You still struggle. You find yourself struggling with over trading. You just can't help making trades. So let's step back for a moment and let's look at this. When we stare at the screen all the time, the more we stare at the screen, the more we introduce stress. And some trades, Paul Tudor Jones once told me when we were having lunch, he said to me, he's like, I know when I have a bad trade on because I can't stop staring at it. Because my best trades, I don't look at the screen. Because, but when I have a trade on that's mediocre or it's not working, one of the things that I'm aware of is that when I can't stop staring at it, I probably don't have a very good trade on. I'm like, I do the same thing, Paul. I know exactly what you're talking about. Because we have a belief that if we stare at the screen enough, we can will the trade back to being good. Well, that's bullshit. That's not going to happen. The other thing is we have this work ethic that is built into our brains by many of our parents and by society that if we go to work, we put an amount of time in, we get paid hourly, right? With the hourly wage. So if I work an hour, I get paid 20 bucks or 50 bucks or 100 bucks or whatever. So there becomes this linkage in our brain between the amount of time we work equals the amount of money we make. Right? So there's this linkage. In trading, we start to think about, well, the more I trade, the more I will make. Therefore, I should trade more to make more. So when we're staring at the screen, the more we stare at the screen, the more inclined we become to take action, because it doesn't make sense that I would sit here for hours on end and not do anything. I make money because I trade, so therefore I trade to make money. It's this loop in our head. Well, this loop is not productive. It leads us to take marginal trades for the sake of making a trade. So we have this strong desire to justify our time by taking action. And then finally, there's this concept of seeing ghosts. And when we see ghosts, This is basically when we see patterns in the screen aren't really there. We see patterns in the chart that aren't really there. The more you stare at the screen, the more you will see ghosts. Essentially, seeing a trade that you go back later, you're like, what was I thinking? There wasn't even a setup there. So I just want you to notice all these negative things that are occurring because I'm staring at the screen all the time. So I need to build a framework to promote me to succeed, not lead me down a path of failure. So there's a few things that we can do, 4 steps specifically, that can help you massively improve your day trading. So let's talk about what those are. The 4-step process to massively improve your day trading. 1, you put your orders in the market. Don't hold them mentally, put them in the market. Some of you might say, well, I like to use mental stops, not actual stops. I don't like having my level out there in the market. I need to get feedback. Well, that's fine. And you can 1, replace it with alerts, or 2, you can put smaller size in. You could work a 1 lot. You could work 10 shares, whatever the case may be. You can put an order in the market. Orders in the market are real, and you will pay attention when they get executed. So you put your market orders in the market, you get them all out there. So there's nothing for you to think about. And these orders are based off of what you see. So I'm going to buy this level. And if I buy this level, then I'll put a stop in here. And there's complex orders you can use that I can buy this level. And when I buy it, it'll put a stop and a target in. I can pre-program all of that in advance. So that's what I do. I have all of that in the market ready to go. Then I set any necessary price alerts. So if there's a key level I'm monitoring and it gets down to that level and I really want to focus in and stalk a buy, well, then I'll put that price level in. If I have a trade on and it's working and there's a level that I want to make sure if it gets up there, I want to go take a look at because I want to look at hedging my trade or peeling my trade, well, then I will put an order in at that, or I'll put an alert in at that level. So I put my orders in, I set all my price alerts. Then we move on to step 3, which step 3 is we set time alerts. So if we're trading a time frame, for example, let's say you're trading 60-minute bars. Well, you'll set an alert for 5 minutes before the 60 minutes is up, and you'll come back at the end of the hour. And you'll evaluate everything that's going on as you transition from the end of the hour to the new hour. You'll reset your orders, you'll reset your price alerts, and then you'll set another time alert for an hour from now or 5 minutes before the hour ends. What you can see what's happening is we're only returning to the screen when there is something that we need to do, something we need to look at, right? So we're only coming, we always come to the screen with a purpose. We never just hang out in front of the screen. We never just hang out and watch. We come with a purpose. We get done what we need to get done, and then we get out of there. When the alerts go off, if a price alert goes off, then we return to the screen and we evaluate what's going on in the market. If you're close to having a trading entry, then you stay and you watch the chart because you're there for a purpose. You're there to stalk an entry. You're there to stalk an exit. If it's a new period, you reevaluate your levels and you reset your alerts, and then you move on. This concept of force checking can massively change the satisfaction that you have with your trading because you won't be in front of the screen all the time. You can be off doing other things. You could be learning something new. You could be journaling. You could be doing research on your trades. You could be watching a TV show or hanging out with your wife or working out. There's all kinds of things that you could be doing that were productive while the market is trading and you're a day trader. But this takes discipline and it takes letting go of some of the attachments you have to watching what's going on. But this all comes down to a key question that I ask all my students all the time. It's a very simple question. And the question is, what do you want? What do you want? So what do you want from day trading? And be real honest with yourself. Are you there to make money? Are you there for the excitement? If you're there for the money, this 4-step process will really serve you well. Because I'm just here to make money and that's it. I don't care about anything else. I'm just here to make money. So I'll work this process. I'll be disciplined and I'll make money. And I'll enjoy my life while I'm making money. If you're there for the excitement, you got to ask yourself a different set of questions. Because if you're there for the excitement or you're there for the thrill, then you really are a gambler. You're really a gambler. And you have to be honest with yourself that you're in danger of taking some massive losses. You're in danger of, at minimum, of getting ground down and failing. Which is it? You got to be clear about what you want. Look, I know lots of traders who love excitement. Okay. They love excitement. There's nothing wrong with that, but you have to frame it in the right way. Do not get your excitement by day trading 5-minute bars in GameStop or whatever the case may be. Go get your excitement, go make your money day trading, and go bungee jump. Go sign up for a race car program and go drive race cars at 150 miles an hour on a track. If you love adrenaline, go get your adrenaline somewhere else besides the market. If you get your adrenaline in the market, you will die. If you do it somewhere else, you can have fun with it. You can meet this need you have for excitement for the rush and leave the trading and just making money.